Good evening, my dear viewers, Vidhyalakshmi YouTube channel. I am Venugopal, Department of Commerce. Today we are going to discuss the topic in accountancy, the main topic, the content for our basic accounting terminologies. So, what is mean by terminologies? Terminologies means day to day, what are the regular routine transaction name of the accounts while we are using in our accounting terms, that is mean by accounting terminology. So, accounting is a versatile system. Versatile system. So, versatile system means here it is a modern trend. We are using the system, serves a large number of purposes. So, what large number of purposes in modern business we are following the terminologies used to be understand for the all the people's and the public's point of view and the students' point of view. Now, we will see the first one, transaction. What is mean by transaction? So, transaction means day to day activities for our in our business, money or money's worth. Money means cash, money's worth means goods, it means assets, fixed, tangible, intangible or movable, immovable or fixed assets, whatever it is, that is mean by other than goods. That means we are following the goods, money or money's worth. The idea for any one person to another, we exchanging the goods and commodities, that is mean by transaction. So, buyer they are ready to buy to seller, the seller ready to sell goods to the buyer, that is mean by transaction, day to day activity. And second one, cash transaction. So, generally transaction there are two types are there, one is cash transaction, another one is credit transaction. So, what is mean by cash transaction? While you are purchasing, while you are saying selling, we are paying money or receiving money immediately, that is mean by cash transaction. So, it is a transaction which involve immediate cash receipt or immediate cash payment, that is mean by cash transaction. Now, we will move on next, credit transaction. What is mean by credit transaction? So, while we are purchasing or selling, we are not paying money immediately, we are not receiving money immediately, but receiving or paying to be later, that is mean by credit transaction. Okay. So, it is a transaction in which cash is not received or paid immediately, but will be received or paid later, that is mean by credit transaction. Next one, account. What is mean by account? Account is a summary of transaction. Account is a summary of transaction. It is a basic unit for the measurement of accounting. How we are measure the accounting means start from classifying, summarizing, analyzing, interpreting, communicating to users point of view. We can use the set of books, the summary of statement or summary of transaction under the head, that is mean by account. Next one, capital. What is mean by capital? It is a capital amount investment by a owner. He started business or proprietor or promoter or founder or innovator, whoever may be. He invested money, start business. So, that is mean by the capitalization amount for called capital. The next one, drawing. What is mean by drawing? The businessman, he withdrew the money for the personal use or of his use. He withdraw money. So, the amount or cash or value of goods. Sometimes he withdraw the goods also. He purchase of goods or they give the sample production, distribution to others point of view also, the assets, that is mean by withdrawn from business by owner for the person or personal use or of his use, that is mean by drawings. The next means voucher. What is mean by voucher? Any written or printed document, any written or printed document, it is a support of the business transaction. The voucher is generally we call cash receipt. While you are purchasing goods, selling goods, we are give the slip, the receipt, name is voucher. So, the cash receipt, invoice, cash memo, bank payment slip, generally we call voucher. So, it is an example for our voucher. Next one, invoice. Invoice, it is a credit transaction. What is a statement prepared, the seller to the buyer. The seller prepared the statement to the seller. They having the 3 copies are there. One copy he is having, another copy giving the purchaser, third copy he can use the loading, unloading, the transportation purpose using. So, the goods of any discount, sometimes we will give, we deduct the discount amount remaining account we show the payable amount or receivable amount for the buyer point of view. Then next one, goods. What is mean by goods? Goods, it is an article. So things are commodities. Generally we call goods. Not only goods there, it means stock. We take assets. That also we generally call goods. So the business dealing, the example of furniture will be goods for those who deal in furniture market. As a furniture seller, he goods sold to buyer mean the furniture seller point of view, it is mean by goods. But as a owner, buyer point of view, it is a asset for the purpose of the business. The next one, purchases. What is mean by purchases? Buying and goods. Buying goods with intention of resale. With intention of resale or used purpose. That is mean by purchases. The next one, purchase return or returns outward. When goods are purchased, that time the goods are any damaged, not in our order, not in accordance with the order, the goods are damaged, not in delivery in time. So in that circumstances, particularly the goods are returned to the manufacturer or wholesaler. That point of view, it is mean by purchase return or returns outward. Why we called it is another name of return outward. Return outward means while we are purchasing, the out again, the goods goes to again to the seller point of view. That is mean by purchase return or returns outward. Next one, sales. What is mean by sales? When goods mean for resale, for sold, goods sold, it is called sales. So it is a sales. Will take the goods, consumable goods, perishable goods, luxurious goods or assets, whatever it is. For the resale purpose, sold goods to other person. That is mean by sale. Sometimes we make the sales, any goods are returned by the customer point of view. That is mean by sales return or returns inward. So sales return mean the customer come to our shop, he buy the goods, that time the goods are damaged or not in order, then he returned the goods to the seller. That is mean by sales return. Why we called returns inward? The seller again receive the goods. So it comes in. That point of view, it is called returns inward. The next one, stock. What is mean by stock? Unsold goods laying, unsold goods laying in a business for a particular date, end of the date. For example, opening date means opening stock, 1/1/2014 or 1/4/2014. The end of the year, that is the date, we have to mention 31/12 or 31/3. That is mean by known as stock. It is a opening stock, closing stock, we call generally, right. Next one, income. What is mean by income? It is amount receivable. It is amount receivable for the purpose of sale of goods. For the purpose of sale of goods, earning from the dividend. We received interest received, commission received, discount received, dividend received. Whatever it is, we are received in our business point of view, in our selling purpose point of view. That things generally we call income. The next one, expenses. We are spending money, we are paying money, we paid money. The payment, what are the entries are there? Generally we call expenses. So it is the amount incurred in order to produce and sell, whatever it is. We can produce or sell the goods and services purpose, rendering the expenses. Generally we call expenses. Next one, solvency. What is mean by solvency? It is a short term. The solvency capacity he is having, the settlement of the debt. So the solvency is the capability of a person or an enterprises to pay the debt. He is having the capability. That is mean by solvency. Then next one, insolvency. He is not capable. He is not incapable settle the amount for the debt. See, the insolvency is the incapability of the person or enterprises to pay the debts. That is mean by insolvency. The next, asset. What is mean by asset? So asset, it is a physical thing. We can see, we can touch, we can feel. The value of goods, generally we call assets. If you take land, building, furniture, then after stock, then after you take for the plant and machinery, office equipments or computer or typewriter, whatever it is. We can see and touch, feel. The physical things are there. That is mean by asset. The next one, liability. Liability means responsible and repayable for the financial obligation of the business. Responsible, repayable as a owner point of view, as a founder point of view, as a proprietor point of view, as a businessman point of view, he is having the financial obligation. The repayable or responsible is having that the content generally we call liability. Next one, debtor. A person who receive a benefit without giving money, or money's worth. He receiving goods or cash immediately, not immediately. So, but liable pay in future, due course of time. The next 15 days afterwards or 1 month afterwards, he pay the money. That is mean by here debtor, right? Debtor is a customer, credit sales. Then creditor. Then this is also a person who gives a benefit. A person who gives a benefit without receiving money. He didn't receive it. But he sent the goods to the manufacturer or a wholesaler point of view. So that is it come claim in future. That is mean by creditor. Then next one, depreciation. So what is mean by depreciation? Depreciation means gradually reduce the value of fixed assets. Gradually reduce the value of fixed assets due to the usage or lapse of time or wear and tear, whatever it is. Wear and tear point of view, the values of assets reduced at the end of the period, the difference between the purchase price and selling price. That is mean by depreciation. So depreciation for us loss in our business point of view. And next one, bad debts. What is mean by bad debts? So in our debtor, there are two type of debtor is there. One is good debtor, another one is bad debtor. Who paid the amount in time, they are called good debtor. So we can remain more times, but still he didn't pay. He is in somewhere, he didn't turn, he settled the amount, he didn't settle the amount. In our business point of view, that debtor name is bad debt, the debt amount name is bad debt. So it is a loss of the business. So bad debts is a loss for our business point of view. For the future, in debtor pay their dues, it is a irrecoverable. Then after receiving, it is a recoverable. Before that, it is a irrecoverable. Okay, my viewers. So today we have discussed, the heading is the basic terminologies for accounting, transactions, the important names, regular names used in our business or company, factory and industries point of view. So if you like the videos, so share to others, then thank you very much.